Good morning all and welcome to today's video. So I apologize in advance. I think we have a little bit of electrical interference on today's video once again. I'm not quite sure why this is happening. I'm not a sound engineer myself, so we're just going to have to deal with that. I have tried to figure it out, and usually it's the case that when something is too close to something else, it creates electrical interference, but I can't seem to figure out the problem. But anyway, I digress. So I'm going to have to go a little bit quicker today because I have a webinar to attend in 20 minutes time. So this is just going to be a short video. There's been a lot of movement across the board, across the pairs, but this is where I've noticed people in general, traders in general, just the next morning after some big moves, they have a million pairs on watch. But what they seem to forget is that you have to wait for the market to breathe. Okay, the market doesn't just keep going indefinitely. Okay, after big moves, the market needs to consolidate, and yes, after some of these big moves, it doesn't often consolidate for as long as you might think, but it still needs to consolidate. And you can just count the candles, okay, often, and to see that many of the entries that you're looking for will not be ready by the end of the day. Okay, when someone runs a long distance, they have to take a bigger breath before they continue on the next leg of their journey. If you think about the bow and arrow being pulled back, for the arrow to travel a long distance, the bow has to be pulled back further. Okay, so that's the way that I like to think about trading. Okay, so on the higher time frames on CAD yen, we have this impulse down followed by this very wide correction. Okay, so I'm always mindful of that. Although I'm looking for shorts, I am mindful of how wide this correction has become relative to the move down which has preceded it, because that increases the likelihood of, when we have a correction this wide relative to the move down, it increases the likelihood of us coming up to test a high such as this to give us that M style or W style pattern that I've often talked about in some of my other videos. Okay, but once again, that doesn't mean to say that we can't capitalize on a move to the downside. Okay, in the meantime, okay, before that longer term direction plays out. After all, this is the weekly chart. So what I see at the moment is that we have this high here, which we sold off aggressively from. We near missed that area and create this kind of corrective middle section. We come back up, test the high, and typically speaking, this is where we would be looking for that impulse correction continuation to push lower. However, one of the reasons it likely didn't push lower is because of how wide this whole thing had become relative to the move down which has preceded it. Okay, so let's zoom into the next piece of price action. You can see here what has price done after this failed continuation structure to the downside, which likely failed for the reason given. What has price done? Well, it's moved up. It got to here. We near missed to this area. Okay, we then tapped into it, and then we have this kind of this 1, 2, 3 touch structure with a 1, 2, 3 middle section. Okay, notice in this instance that this is more corrective than the move up into it and the move out of it, giving me a clue that this is the structure. We don't always have to go straight to the third touch. If we break above this second touch, particularly if this second touch and the likely third touch would be close, we don't always have to get to the third touch. And then we started to commit to the downside and once again scooped back up. Okay, so the next thing I'm asking myself is, why did price scoop back up? Let's have a look. So we have, in this instance, we do have, well, it likely found liquidity from here. The volume was built here, okay? Volume was built here. There was a lot of volume there. So it's no surprise to me that when we tapped into that area and broke just below it, that price found enough liquidity to move it to the upside. And potentially this is another extension of the pattern, okay, where we have this move up the middle section and then a more impulsive move out. Okay, this is not the clearest of middle sections, so I am mindful of that, and that does alter my thinking ever so slightly, or it is a factor in my thinking, I should say. So you can see, if we just drill down now, I've literally this morning I changed my entry criteria ever so slightly, because you can see that price may be forming a base here. Okay, Now, you might be thinking, well, would you consider getting long? Well, I would, but I'd want to see something a little bit more developed here. And once again, as I keep saying, if we just count the candles at the end of the day, if we just had this sharp move up, sharp move down, sharp move up, sharp move down, this is not. If I was going to get long here, this is not indicative of a move to the upside. I would want to see something a little bit more developed. Okay, so I'd want to see a move down and then more of that kind of corrective middle section for a move into something like that with a bit more substance to it, with a bit more volume. Okay, as I said, the market needs to breathe before it. We've had a series of tight corrections here. The market at some stages is going to need to take a bigger breath, and then potentially we could be looking for that higher time frame move to then target this high here, or you can see here this sharp move there, okay, as a kind of first higher time frame target. But where today's forecast is concerned, where entries which may be ready by the end of the day are concerned, what I'll be looking for is the following. Okay, so let's get these brushes off the chart. What I'll be looking for is specifically, so previously I was looking for a two-touch. I was looking for price to break below this low, and I was looking for an entry, a two-touch continuation under here. But because price has started to form a bit of a base, or it looks like it might be forming a bit of a base, this is why it's imperative as traders that we stay neutral. Otherwise, we blindside ourselves to what the signs that the market might be giving us. Because the market may be forming a base to push higher, to give us this larger structure to push higher, because of that higher time frame M style pattern that I was talking about. What I'll be looking for is be looking for a break below here, and whereas before I was looking for a 5-minute continuation, I'm now not looking for a 5-minute continuation. So 6 to 8 corrective 5-minute candles. I'm now looking for a minimum of a 15-minute continuation. Okay, and when we get something which is kind of retesting the back end of something else. So when we're retesting what could be the back end of a structure, I always look for a 3-touch continuation, because the 3-touch continuation then confirms, okay, that this correction is not part of, something like that. Okay, if you were to take a 2-touch continuation, if price was to break below and you get a 2-touch continuation, particularly a 5-minute one, okay, you're more likely to be tagged in, tagged out, and then you end up kicking yourself, and then price does something like that, taps into that, and then this just becomes a 1, 2, 3 to push higher. Okay, so to mitigate the chances of that, break below 6 to 8 corrective 15-minute candles is a minimum. Okay, the longer the price consolidates sideways, the more likely it is that this is just the banks and the bigger players stacking their orders for the next wave lower. Of course, you don't want it consolidating sideways indefinitely, but so long as the consolidation is proportionate to the impulse down which has preceded it, that is usually just the banks and the bigger players stacking their orders for the next wave lower in this instance. And then my first target would be here. You can see there was a bit of a sharp move here, sharp move down, followed by a sharp move up, which just so happened to retest that previous high. So that makes sense to me, where I could be targeting there as a first target for something in the region of 3 to 3.5%. Okay, and then my first solid target would be, so I'd be playing from range to range. I would be targeting down here, but because the 90% mark is where price can pull back deeply and pull back about 50%, I don't want to give too much profit back to the market. So I would set a take profit there, and I would trail my stop loss accordingly, and that would potentially give me something in the region of 10.5%. And if this is one thing that's important to do that many people don't do. We just take this off the chart. Okay, if you imagine what the 4-hour would look like by that point, if we're trading below there and we have that would be pretty solid in my opinion and experience. And we would have also, just to touch on it, we would have retraced, if we had an entry below that line that I've got there, those previous lower time frame lows, we would also have retraced 50% of the length of this previous bullish daily close as well. Okay, So that would be solid. And I think then it would be all systems go for a move to the downside. Okay, but we shall see. I'm just going to let the market do its thing. That's what I'm going to be looking for today, folks. As I said, there's been a lot of movement, and this is where my searches for my YouTube videos typically go up when there's been big moves. Because, and if you look at the search terms, then people are not searching for how to trade or anything like that. The search terms are almost exclusively currency pairs. So they're looking for euro dollar, pound dollar. As soon as the market moves, my videos get lots of views on YouTube, and there's lots of searches for euro dollar and CAD yen and all sorts. And that tells me that people are not trying to look to learn how to trade. What they're actually doing, many people, is they're actually thinking, oh, the market has moved. What do I do here? What am I supposed to do? I know, I'll just check out what this bloke said and do whatever he said to do. That's not treating trading like a business. This is not a signal service. I'm not trying to say CAD Gen's moved, this is what you should do. I'm trying to challenge your way of thinking, because I know that most people do not trade raw price action like we do. Those of us who trade the Falcon strategy, most people trade with indicators and all kinds of mess on their charts, which perhaps explains why they never actually fully learn to read price action, because to read price action, you need your charts clutter free. But that's a different argument for a different day. So I have an alert set there just to see if we push down. I'm interested. The reason I've got the alert set just above is because I'm interested to see if we push down and then we start to get that middle section like that, for then the move back down, which may be ready kind of Friday, as you can see at the bottom of the screen. I'm interested to see what happens if we get close to this area, because if we start rejecting from there and doing this, then this is likely just a bull flag to push higher. But we shall see. And if that starts to happen, then I will just take this pair off of watch. Thanks for watching, folks. I hope you've enjoyed this video, and I will see you again in the next one, which will likely be made tomorrow. Have a great day.